Hello, folks. I am Jon Najarian. My brother Pete and I will be breaking down all that glitters may indeed be gold. And it is, in fact, a big investment bank on Wall Street that makes that statement. And we'll have the 411 for you on that today on the Rebel's Edge. Bang. Hello, my friends. I'm Jon Najarian. He is Pete Najarian, and parts unknown.
I'm in the Bay Area, bro.
Yeah, he's usually saying to me, "Where are you?" I'm in Chicago today. Pete, on the other hand, is out in the Bay Area, you said, right, Pete?
Bay Area, I've got some beautiful background, but that background is a hotel, actually. I'm outside right now. It's a beautiful sunny day. California's living up to the golden sun that they always talk about. It's beautiful, and it's going to be a gorgeous day out here, John.
Well, I hope you get out and enjoy it, Pete.
Yeah.
All right, let's dive right into the macro minute. Macro minute, I'm going to say, well, when you see troops rolling into Lebanon from Israel, it's probably going to be a good day for oil traders. And indeed it was. In fact, it spiked up to about $73 last night, and today it got as high as $72.50. But it has pulled back, Pete. So anyway, I'll say that is my macro minute today, that we've got the Middle East not on fire, but right on the verge of some pretty big stuff going on.
And I think that's got to be the focal point, John, the Middle East right now. I mean, the tensions that are there, the retaliations that are there, the geopolitical side of what's going on over there, it is all influencing a lot of different parts of the market, of course. Everything from, gold and silver, but specifically directly, we're talking about crude oil and the jumps that we've seen on that ever since some of those bombs were shot off. It's an amazing situation that we're dealing with right now. And we've got to deal with it in a different way, a much different way, a financial way, just basically trying to navigate the markets. And, obviously we all have our hearts and prayers on what's going on over there, but we still have to trade. The day still moves on, and we've got to figure out how to maneuver in these markets given what the backdrop is.
Yeah, and we didn't see a huge spike in the VIX. Pete will talk about it, I'm sure, now with fantastic futures, but we may see something like that if things escalate as much as we hope they don't. All right, Pete, Bank of England issued warnings about stretched asset valuations. Now, when a bank, whether it's the U.S. Federal Reserve or whether it's the Bank of England, issues a statement like that, it's kind of noteworthy. And that's probably one of the reasons Goldman Sachs says gold prices higher. Because if people are worried about stretched asset prices and so forth, Goldman's thinking, well, people might go for the safety of gold. And indeed they have over the past 9 months, Pete.
Yeah, the past 9 months is right. One that's also made a little bit of a move of late has been silver as well, John, which couldn't get over 30. And if it did get over 30, it immediately sold back off. And now here we are basically trading very close to 32 with silver. So silver, gold, those precious metals making a pretty nice move to the upside. Gold has been absolutely outstanding. You did say volatility, and I'm going to tell you the VIX is pretty interesting, John. I mean, we've gotten near 20, pulled back yesterday. Near 20 again, or at 20. Pulled back. And that's kind of where we are right now. Anything under 20 is a little bit easier, I think, in terms of the trade. Once you get to that 20 to 25, I'll call it a no-fly zone. But we haven't gotten there yet. We haven't gotten sticky up there yet. It could happen. But for right now, we're basically call it anywhere between 18.5 and maybe 19.5. That's where we sit with the volatility index. So you can expect to see these 1% plus moves on a daily basis in the S&P, and that's exactly what we're seeing right now.
That's very true. The VIX is once again letting us know that there's a lot of uncertainty. Again, It doesn't always mean that the market's going down. Sometimes the VIX actually goes up when the market goes up. Those are rare instances, but you could point to things like the meme stock melt up and others that would demonstrate that. All right, Pete, let's talk about Humana. This one has been up and down this year. And they basically said preliminary ratings that they get for the Centers for Medicare and Medicaid only 25% of Humana's members are enrolled in plans rated 4 stars and above. That's what they're predicting right now. That is a big drop from what they had predicted and what they had been running so far in 2024, Pete, which was more like 94% of people. So this is one other place where people are cutting back because they're just stretched, like the Bank of England said.
You're exactly right, John. I mean, going from 94% to 25% for 2025, that is an unbelievable drop. And that's why we're seeing that stock hit today, 52-week lows. It bounced off of that, established it down at 213, jumped back a little bit. Last I looked, I think it was down about 17%, something close to that, John. But nonetheless, 10x as far as the volume that's traded right now with the stock itself, the concerns over revenue, the concerns over margins, this concerns over the fact that they are making this huge move, and the 4.5 stars to 3.5 stars. Everything you're looking at right now for Humana is looking pretty damn negative. For that reason alone, I don't see a reason to jump in here right now, John. I think just because of the fact that it hits 52-week lows doesn't mean necessarily that that's it and it's all over. They've got to show us a lot, and they've got to prove to us that they were able to bounce back. Until then, I think this is a no touch. They're going to have to prove it, and I don't mind something like that. If we miss the bottom 20 or 30 points, and then it starts to move, and then we get stuff up next quarter, that would be one thing. But I don't think you got to jump on this one right now. I don't see anything positive at all in this report.
Nope, I don't either, Pete. And the stock was 460 to start the year. Like you just said, it's 230 right now. I'm not real good at math, but let me see. That's about they lost about half their value.
Yeah.
In rough terms.
Yeah, that's pretty good.
All right. What about Nike, Pete? Oh my gosh, this Donahue, whatever. He's out. Hill is in. But one of the first things that Hill's going to be doing here, Pete, apparently, is not providing guidance. And that's something that kind of spooked the Nike faithful. Also, they are having a lot of issues. Their full year guidance, they withdrew it, like I just said, and they are falling short of consensus right and left. And that isn't good for any stock, in particular, a high profile one like this. Hopefully Hill can get the ship righted, Pete, but man, it's down another 6% today.
Yeah, well, when your earnings are down 25%, John, and you've got a new CEO transition, and we don't know enough about how this is going to be. One thing we do know about the markets, uncertainty is basically a bad word. And right now, when you look at Nike, I would say they are filled with uncertainty. From the C-suite on down, they're losing to a lot of the competition right now. They've certainly found themselves into a real bind of late. In North America, that's an area they owned forever, right? And now they don't. And there's plenty of competition, especially on the shoe side of things. Obviously, shirts and and slacks and all those different things, shorts. That's a big deal. But I'll tell you, that's still a shoe company, and that's the problem, John. There are companies going after them and winning, and that isn't something that Nike's had to deal with in the past. So there's a lot of reasons that this one is going down at about 6% today. Again, this would be one where I'd say because of the uncertainty, I don't know that you got to jump on this one either. Sometimes I think it's a great opportunity. In this case, with what little we've got in front of us, I don't see a great reason right now to say, you know what, it's bottomed out and this thing's going to move to the upside. This is one of those where they're still going to be, competing with on. They're going to still compete with all the other monstrous competitors out there. And I think this is going to be a real problem, and you look over at an Under Armour or some of the others, they're actually doing far better than Nike. Nike is struggling more than any of them at this point.
Well, 77 for me, Pete, would be a line in the sand that I'd say I would take a shot. Now, that's $6 lower than where the stock is right now. If some of you out there listening and watching were option traders, you could sell some puts down, for instance, if you sold the 80 puts and if you were able to get $3 for the 80 puts, well, effectively, it's like being long the stock at 77. Now, I'm not recommending that, but I'm just saying for all the people out there like me that just picked a number, for me, 77. If you think that 77 is a good buying area, you could either throw on a call spread, as the stock trades lower, or sell a put spread, which means that if it doesn't get to 77 and in fact stays above 77, you're a happy camper. You keep all the premium from that put, but you're obligating yourself to buy the stock by selling a put. So be aware of that.
Yeah.
All right. Let's take a look, Pete, at ConAgra. Yet another example of the consumer being stretched. ConAgra reported adjusted earnings of 53 cents. The street was looking for 60 cents. And these guys, Pete, in the ag space, as the name implies, ConAgra, they got revenue, but the revenue missed as well. So they have top line miss, bottom line miss. It's a tough environment for CAG right now.
Yeah, down about 10% today, John, somewhere in that category. It's right there in the middle of the 52-week low and the 52-week high. That part's interesting to some degree, but when you year over year are down 20% on your earnings and you missed this quarter as far as what people were looking for, that's bad. That's bad. And then margins decrease, that's bad. And then all of a sudden you look over at the revenue or the sales, that's down 4%, that's bad. I mean, across the board right now, I sound like a broken record with some of these companies, but you look at ConAgra and you say, well, it's got to show us something. And at some point, maybe they can make that turn. They haven't been able to make it yet. The one thing that I can say is a positive, they did reaffirm the guidance for 2025. So that is something. But outside of that, John, this is another one where it's not a dumpster fire in this case, but it certainly isn't good, because when you're down 20% on your earnings year over year, that's a pretty significant amount. And I think I'd be concerned as a shareholder in this name.
Yeah. And speaking of names, Pete, Duncan Hines, Marie Callender's, Birdseye, Healthy Choice, Slim Jim, Ready Whip. I mean, these are all some of the names, the brands, if you will, that are underneath ConAgra. And consumers are cutting back, and I bet their input prices are up, Pete. So that's a double negative for ConAgra.
Yeah.
All right. Let's finish it up today, Pete, on the stock side with Joby, Joby. We've talked about this one before because this is basically electric vertical lift vehicles, Pete. So in other words, we're not talking about helicopters that are running on, basically jet fuel. We're talking about something that looks and works like a helicopter, but it's electric. And these guys just got another big investment from Toyota. Toyota put $500 million, half a bill, into them, Pete. And they're going to be doing it in a couple tranches, but this has to be great news for Joby shareholders.
Well, especially, John, it's been in a range. It's not a monstrous range, but it's still a pretty decent range, 4.5 to 770. And here we are sort of in the middle, but on the lower end. At least it started off the day on the lower end until we opened. And out on this news, it made a nice, big, huge run all the way up and over 6. And oh, by the way, I know you're going to point out the unusual, but before we do, you got this Toyota side where they put in an investment of $500 million that you just talked about, and that got people pretty excited with the two tranches. They are now up to just about $900 million coming from Toyota as far as the investment into Joby. So this one put a smile on my face, John, because they were buying calls not too long ago for the 5.5 strike calls that have made a heck of a move to the upside. And today there's even more activity going on. So when I look at this and I look at from a financial perspective, they did what they needed to do. They needed a little bit more cash. They did exactly that. So the cash position is very solid right now for the company. This is a futuristic sounding company for sure, right? We're talking about basically air taxis. So it could be a pretty interesting one, John. I sure like it. And I love what we're seeing happening where we had unusual, they continue to come with unusual, and the stock has made this great stair step backing up above 6. Now it's floating around either side of 6, but nonetheless, a really nice move today.
Yep, it sure is. Well, Pete, I know we've got a big game with Cal. That's the University of California, folks, playing the University of Miami. The U, as J.C. Peretz would say. So we had a little shot that we thought we'd share with you, folks. Cal, being California, of course, is woke. And I guess the other guys like beverages, eh, Pete?
Is that what that is?
Is that what that is?
There's always creative people out there, and you've just got to love the creativity and the fun. And I truly don't think that anybody means harm by these things. I think it's just in fun, just throwing it out there. So that's my take on that one. But why don't we start, John, first with the pro game? And I say that because we talk about this all the time. We talk about receivers, and we look at this, and I'm the guy who said, look, do you really got to give JJ, Jets, as he likes to call himself now, is he the best receiver in football? Absolutely he is. But is it by a huge margin? I would say absolutely not. I think he's great. He's the best there is right now in the game. But there are so many receivers out there, John, that you're going to pay certain guys that are going to get $40 million a year, $35, $40 million a year as a receiver, or you've got other guys getting a heck of a lot less. Well, it's one of those things where I think you just have to take a look. And I see the name up there on the plaque. We're looking at Devante Adams, right? Well, the Raiders came out and said, you know what? I know we haven't said this before, but we would be interested in a trade. And I thought that was interesting in and of itself, John. Here's a guy who's 31 years old, and he's interested in a trade. He is making a fair amount of money right now, by the way. I mean, we're talking huge. He's getting $17.5 million a year right now, and his contract will jump up even more, somewhere closer to $36 million, John, a year for the final 2 years. I know why they want to trade him. They want to trade him because as good as he might be, the team itself is struggling. The quarterbacks aren't really there for him, and maybe they can get a lot of draft picks for him. That might actually happen because the NFL right now, everybody's in it for the receivers, and that's what they're all about. So this could be an interesting buildup for the Raiders if they do things right because, John, when you look at the top 10, just depends on what category you're looking for. What are the group of 10 that are going to be there? Is it yards per catch? It's this group. Is it, touchdowns? It's this group. Is it, targets? It's this group. Everybody's got a way of kind of shifting around a little bit. I would say Justin Jefferson is the best, and he probably is, but there's a heck of a lot of guys right on his toes, John, right behind him, just kind of waiting to pass him up if they can. So we'll see how that plays out. But I think this is a great opportunity for the Raiders. If indeed, does he go to the Jets? Because the Jets need something. They're close, John, but not all the way there. And that could be a trade, but that's a heck of a lot of money. Do the Jets really want to do that? They're already paying Rodgers enough money. Do they really go out and get this guy as their receiver? Maybe they do, but I think there's some opportunities out there for him. And whoever makes that trade, I think this will be good for the Raiders if they do it right.
You're right. I'd say Baltimore, the Bills, and the Jets would be the leading candidates, Pete. The Jets, because, where did he come from? Green Bay, right?
Yep.
I mean, didn't Devante, Pete, wasn't he playing with Rodgers already in Green Bay?
Best friends. And then they got rid of his quarterback, Derek Carr, who they were best friends from college at Fresno State. So, yeah, there's a lot of things that go into this whole thing. They don't need him down in New Orleans. They are loaded with wide receivers, and Derek Carr's having a great start to the year. So it'll be interesting to see who wants to pony up on that one, John. You talked about Cal. I'm going to go even a little bit farther with this Cal storyline. So Cal starts off the season. Now, they played a couple of cupcakes, but they also went to Auburn. They beat Auburn, and I think that was unexpected, but they're now in the ACC. Of course, it makes sense because they're on the west coast of the United States and they're in the Atlantic Coast Conference. But nonetheless, all that being said, they got a kid from the city of Miami named Fernando. And this kid has had an absolutely record-starting year for himself. He's doing really, really well with the Cal Bears. They've got a great running game. They've got a great receiver out there as well. Obviously, O-lineman and a pretty decent defense, John. They're going to play Miami. It would have been a game that would have been a game day game had they not lost to Florida State. Now, Florida State was 0-3. They started off terrible. Cal went toe-to-toe with them. Matter of fact, the quarterback threw for over 300 yards in that game. Really had a great performance, but they lost. Florida State finally won. Let's not forget, Florida State was number 10 in the country when the year started. They are damn good. That's a really good football team. Unfortunately, they just haven't been able to put it together. They put it together enough to beat Cal. I'm going to go out on a limb and say this. Miami goes to Cal. It's a long flight. Maybe they have a little too much fun. It's California, of course, and everything else. I think the Cal Golden Bears have a great opportunity for an upset, John. I can't say positively, yes, this happens, but I'll tell you what, something in my gut tells me they've got all the different pieces. Can they stop the quarterback? I think they might have an opportunity. If they can turn the ball over, I think the Cal Golden Bears are going to be marching around out there, John, pretty damn excited at the end of the game. What about you? Do you think they have a chance?
They have a chance, and especially if people are listening to Pete on the betting side, I'd say if you're getting 11, Pete, because the spread was as high as 13.5 for a while. It's come down to 11. Well, when spreads come down, it's usually because you're getting too much money on one side or the other. So the spread either, widens out, tightens up, whatever, depending on which side is the dominant side. But if you can get 11 on this game, Pete, I agree with you. Could Miami win by 10 or more? Of course they could. But I like the odds that Cal would be playing to stay with them and perhaps even threaten to win. Because as you said, against Florida State, top 10 team at the beginning of the season, had a rough start, but they're a team that Cal could pretty much step on the field and play with every day, it looks like. Yep. So Miami, that might be the same. Let me leave you with this thought, though, Pete. Michigan, Washington. That's the rematch for the national championship, right? Guess what? Washington has won 17 straight home games going back to 2022. So I really kind of like that game, Pete, the way that one's shaping up. And I think they're two great teams, but you guys, your Gophers, pushed them right to the brink. And if they didn't have that bad offside call, who knows? They might have either beat them or sent it into another overtime.
Yeah, they played really well, the Golden Gophers, only in the second half. First half, they were sleepwalking. They were intimidated. Second half, they lit it up. They got into the game. They got the bad call on the onside that they recovered, and that's why they lost. I'll tell you, Michigan is not the same Michigan team. I would also say Washington's not the same Washington team. They lost their quarterback. They lost their best receiver, very much like Michigan. So are they down a little bit? Yes. Are they still damn good because they've got a heck of a lot of talent on either side of the ball on both of those schools? Absolutely. So this should be a really, really fun game, John. I look forward to this, the national championship rematch. That should be awesome.
Yep. Well, there's a lot of stuff to watch in the markets today too, folks. And don't forget, we're going to have a special free webinar at 3 p.m. Eastern time today over here at Market Rebellion. If you go to Market Rebellion, you can sign up for it. It's a free description of what our 3 at 3 service is, where we give you 3 fresh picks that day as far as unusual activity. And we also have 3 at 3 Pro, where you get a little teaching, a little mentoring. You get write-ups every day beyond what the folks that just subscribe to 3 at 3 get. So if you want to hear Justin and I talk about all the cool stuff you get, well, come sign up. It's a free one, 3 o'clock Eastern time today. And Pete and I will be back tomorrow at 1.